Hi, this is Joe Rabil with Rabil Stock Research. So what I want to talk about today is a bit of a shift in terms of the way we want to look at stocks. Now, I like to look at momentum indicators, and I still believe they're very important. However, with all the volatility, there's always going to be lag to this. So I talk about this a lot to my subscribers along with during my course. I go through that in detail as well. And so when that's the case, we need to lean on other things. So I look at price, I look at the Fibonacci retracements, but I think there is an indicator that I think can really help, especially with what's taking place with the market, and that's the relative strength. I'm going to show you how I would go about using the relative strength and how it can kind of create a dividing line between the stocks that you should be focusing on and the ones that you should be avoiding. All right, let's go ahead and get into this. Okay, so let me start by going back to NVDA back in 2020. All right, we had a massive market drop, during the COVID move. All right. And if you notice what took place in this stock, so let me just show you what actually occurred here. So it went from, now this is post split. So, but it was at $8 and it dropped down to $4.50. So it was a big drop off the high. And I think the stock was actually maybe at like 80 and it dropped to 50 or something like that. I don't remember the exact numbers at that point, but I remember this pattern very, very clearly because notice what it did. It was sort of overbought, stretched away from the 18-month line, and the correction and the decline in the market caused it to pull back to the 18-month. All right. So that's what this green line is. So we basically get a pullback or a correction back to the 18-month line, and that's a pretty big drop. Now, if you're just looking at the price action, or if you just bought it at $8, let's say, and it's at $5.50, you're thinking, this is a really poor stock because it drops so quickly. But if you look at what happened on a relative basis, this black line is showing the relative strength versus the S&P. So what's happening here is that it's essentially showing that when it's rising, it's outperforming the S&P. When it's declining, it's underperforming the S&P. So this black line is showing that it's actually going up. Even though this dropped as significantly as it did, the trend of the relative strength continued to move up. So I'm really focusing in on stocks that were holding their 30-week moving average of the relative strength on this move. All right. Now, if you also notice during this decline, the RSI 20 just barely dropped below the 50 mark, and we got deeply oversold using the RSI 5. All right. That's a lot different than something like this where we clearly break the 50 line with the RSI 20. In this case, it just barely broke it and then immediately got back up the week after. All right, so we've got a lot of things going on in this one chart. Big, deep decline being caused by the market. How do I know it's being caused by the market? Because this line is actually going up. It's not going down based on its own merit like it was here. It's going down because the market's dragging it down. All right, so we want to be focusing in on this line. Now, the reason why I like to lean on this during these times is that it doesn't have lag to it. It will not have the type of lag that we'll get in ADX and or MACD at times because of the way it is calculated. So we can see that if the RS line is not going down, it's being resilient. All right, so let's just bring this up to date here. And let's look at a couple of things. So number one, if we look at NVIDIA now, it's not the same stock that it was back in 2020. I mean, it's not terrible. It's not rolling over, but it's not in this type of position where it's still in an uptrend, or back here where it's holding this moving average. It's kind of gone flat relative. Now, it could be making a move up into the upper end of this region, but I think there's a little bit too much resistance in this now. But let's sort of look at kind of let's divide a few stocks here. So look at what's taken place here. Now, I know this did drop down barely below the moving average, but the moving average never rolled over. And again, if you notice what took place, the price really kind of respected that 18-month moving average. Now, if we look at the RSI, to me, that dropped down a little too much. So this is not really a candidate for a straight up move, in my opinion, because of the way it is set up. Let's compare that to something like AVGI. Same kind of pattern as the Meta, right? I mean, good overall setup, and the moving average is still rising, but a little bit of a deep pullback. So this should mean that we have a little bit of hesitation here before we try and break out. If we look at something like JP Morgan, JP Morgan never broke its moving average. This relative strength has maintained its trend throughout. All right. And we came down and really held the 18-month line. So I think this is a pretty good candidate for a minor pullback and then potentially continuing to move higher. Now, I do want to make this clear, though. The market could still have risk in it. I mean, we could have a market decline, but I think the stocks that are showing this relative strength pattern are much more likely to hold and be resilient on the next pullback and hold their prior lows. So I think they set up for, a really good potential up move either way. So the point I'm making is let's say the market makes a move down and has rallied up like this, and let's say the market has a really big drop. The good stocks are going to make a drop that is a lot less significant to the downside and likely make a higher high well before the market does. So we want to be on the lookout for relative strength like right now after a decline in the market. Once the market goes through a decline, we want to be focusing on relative strength. We don't really want to be focusing on relative strength before the decline. We want to focus on it after the decline. So if we do that, we can sort of see, a stock like Apple, which is really having a difficult time on a relative basis, and it's rallying up into the resistance from the 18-month rather than holding it. Okay. If you look at a stock like MasterCard, it just barely came down to the 18-month, and the relative strength line is actually rising here. Right. So we want to stay focusing in on these stocks that are showing this type of strength where the relative strength is actually holding its moving average. We don't get a break of the 18-month. And in this case, we didn't even get anywhere near the type of drop on a RSI basis. And I think this sets the stage for a minor dip and potentially moving higher, especially if the market doesn't have a big drop. Netflix, sort of the same thing, right? I mean, look at how this stock refuses to pull back. It's already at a new high. You want to be looking for pullbacks in something along those lines versus something like Exxon, which has been struggling, right? It's been struggling, but it doesn't have any real momentum in place, and it does have resistance from the 18-month. So hopefully, as you look through and see these different patterns, it starts to make sense to you. As we look at more and more stocks, you can see the ones that are not showing. So this had a pretty decent drop, but then the rally is really the problem. It hasn't had a good rally, and that's why this RS has continued to drop off. Notice how the RSI is staying below the 20 mark, the 50 mark. The 20 RSI is not actually holding it. It's actually staying below. So this is not the type of candidate we want to be focused on. And I'm really kind of leaning on this RS to give us that information. So keep an eye out for this. I think it can really help you sort of distinguish between the names you want to be focusing in on and the names you want to be avoiding. And then there are a huge host of stocks. If you go through and look at the Scooter rankings, you can see some stocks that are really holding up, and we want to look for pullbacks as potential buying opportunities. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. My comments are for educational purposes only. Please do your own research before making any investments. All right, I want to go and take another look. I know I did this last week, but I think after I've done this relative strength lesson, I think it's worthwhile coming back through and looking at the sector action. All right, so if we notice what happened, we had a pretty big drop in the XLC. You see how price dropped? But look at what the relative strength did. Very resilient through that decline. Look at how the XLI had a pretty significant ABC correction pattern. right? But actually, from this point on, has been really actually from the A point has been making higher highs and higher lows, and has been really moving up, especially recently. Notice how the financials, even though we had this big drop, didn't go down. It's still showing a lot of strength. Okay, and the last thing I'll say is that we didn't show really good action in the XLK. All right. But notice what happened since the low. Since the low, this has been outperforming. And I think that is relevant, something we want to keep an eye on. Now, if you look at the rest of, other than the XLY, which is starting to show a little bit of improvement here recently, and I went through every one of the stocks in the consumer discretionary for my Wednesday report for my subscribers. And there's definitely a lot of individual patterns that are showing pretty good strength. But overall, this index is starting to show a little bit of signs of improvement. But if you look at the rest, I really am not a fan of what's going on in these areas. If you notice what the relative strength line has been doing, it's just not clicking in a way that makes us want to focus. So we kind of want to focus in on XLC, XLI, XLF. We probably want to, because XLK is so broad, we kind of always want to be looking at the strongest stocks in there. And then I would say, because I looked at all the individual stocks in the consumer discretionary yesterday and saw the amount of improvement that's taking place, even though this really isn't in a great position, it's not in a bad one, and it is showing improvement here. Those are the ones in at least the areas that I think I'd be most focused on right now. Okay, let's switch over. I do want to take a quick peek at these Scooter rankings from the Stockcharts program. And, I'm just going to point out a couple here that I think are intriguing, and a couple things we need to be on the lookout for. So I think you got to be a little bit more careful with stocks like PLTR, that the origination of the move started in the teens and it's up at 130. So I would view this more as a trading play as opposed to something that you could really sink your teeth into and maybe be in for a little while. If we look at something like Hood, it's sort of in the same boat, but showing a lot of resilience. And to me, it's not that extended. The move started around 30. Yeah, it's doubled from there, but not that bad. But I think in the short term, we do need a little bit of a pullback to set up some kind of a buying opportunity. Whereas something like DUOL is showing a lot of strength, but it's just way too extended right now to be, I wouldn't be chasing something like that. If we look at RBRK, this hasn't been around as long, but we just got a little breakout. Now, the breakout was caused by a 4-week up move. So in most cases, I don't want to buy the breakout. I want to look for some kind of a little dip, and to probably hesitate around this breakout area and give us a little bit more of a setup. Look at something like Cloudflare, which has a really big base to it, came down and found support at the 18-month and all this support at 100, has gotten a really good rally, certainly something to be on the lookout for. All right, let's switch over and take a look at what's going on in the S&P. I'm sorry, in the QQQ. And I want to start with the Fibonacci retracement. And by the way, I mentioned the S&P. I do an update for the S&P on Friday mornings on my YouTube channel. All right, so if we look at what's taken place, we know that the low, at least we discussed this numerous times, at the low, we found support right at the 50% retracement of the big move. So the big move to the upside, we retraced about 50%. All right. Now, and that's the same for the S&P. Now, in this case, off of the drop, we've now rallied and not only well exceeded the 50% mark, but we've gotten through the 618. And when I see that, I tend to not think that we have a big risk of a big drop, at least not right away. Now, it doesn't mean that it can't turn into that down the road, but the idea that it's just going to drop straight away, I think, is pretty small. Now, what could end up happening is it could come up into some resistance and then chop around a little bit. And I think after the move that we've seen, some type of digestion should take place. The more mild it is, the stronger the pattern. And it's possible that this 618 could actually act as support, because that does fit in line with this sort of like little breakout, most recent little breakout area. And I don't look at, these head and shoulder type patterns. We do have somewhat of like an inverted head and shoulders pattern that's developed, with this being the neckline. So just something you kind of want to be aware of is the fact that we've gotten back above this key level on a fib basis, and pullbacks probably going to find support underneath, as opposed to expecting a big drop. All right, let's go to the IWM. So this is a little different. So if you look at the way this is played out, we've got poor relative strength and we've rallied up to the 18-month. Not the kind of pattern we want to be focusing in on. Now, I know I look at so many stocks. I know there's individual stocks in small cap land that are showing a lot of improvement, but I don't know that this index is really ready to do anything meaningful on a relative basis. And that tends to mean that this market could remain a little bit more narrow in focus. And we want to stay focused on the leaders, right? The stocks that have been strong, the ones that are showing the relative strength. All right, let's look at the ARKK Innovation Fund. Get a decent amount of questions on this. Notice how this has bounced off the 18-month. It got kind of below it, but by the end of the month, it got back above. MACD showing signs of improvement. We are back above the 18-week here, which is encouraging, but we have some resistance, and it was a deep pullback based on the MACD on the weekly. So I would think that we channel a little bit in here, and I wouldn't necessarily look for just a quick pullback and buy. I think this is going to need a little bit more work and channeling sideways a little bit, at least something that's going to be reflected on the weekly chart and not just an inter-week pullback. All right, so be on the lookout, be a little patient with this. I think there'll be some resistance probably around 60. If we look at the ANF, we've gotten a really big drop. All right, now one of the things I want to point out is not only are we well below the 18-month line, all right, but we also have this relative strength that's going down. It's trending down, right? And look at how bad the RSI declined below its 50 mark. So we know we don't have good momentum. So this is kind of strike three. Now what's happening is because we're so far away from that 18-month line, we've actually built up a little bit of air where we could get some kind of a trading rally that could take place. And you can see we're starting to sweep around on a daily chart and show a little bit of signs of improvement. But just be prepared for resistance along the way. And I don't know that this stock, I think this stock will have periods where it outperforms a little bit, but I don't know that they're sustainable at this point. So anything you do in a stock like this has to be treated as a short-term trade. That's how I would handle it. Now, I did want to point this out because this was actually a stock, something that I came across. It's an ETF, and it fits so perfectly in what I'm talking about in the lesson in today's show, basically. Notice how we came down and pulled back and held the 18-month on this QTUM. Now, this is an ETF for the quantum computing, all right? It's an equally weighted ETF, and it's set up in the way that it's developing really looks pretty powerful because this is the breakout area. We're not far away from the original breakout. This is not extended by any stretch of the imagination in my opinion. And I think if we get any kind of a little pullback here, even that shows up on a daily chart, I think I would be on the lookout for something like this. This has been incredibly resilient. The volume pattern is outstanding. The momentum indicators all look really good. And you could certainly dive down and look at some individual quantum stocks, but this ETF is pretty impressive in the way that it's developing. Now, let's compare that to what's going on in Nucor, right? I mean, so this is not a stock. We've got a declining 18-month. Not only are we below, like all these were little nicks below the 18-month, and then we failed at the 18-month, and now we're turning this 18-month to the downside. It's acting as resistance now as opposed to acting as support. And the relative strength is confirming that, as is the RSI 20, which cannot get itself back above the 50 level. All right, so I'm trying to simplify this a little bit. Yes, I lean a little bit on the RSI. It's a little quicker in a volatile market environment. But same concept here. Now, what I will say about what's taking place in Nucor is we've had these drops, strong momentum, strong enough momentum, and even strong enough momentum, but it does look like the momentum is slowing a little bit. There might not be a significant amount of downside from here, right? I mean, I'm not talking about this being a big drop. We're coming into this big support area, and it's the big round number at 100, and it's gone from 200 to 100, the 50%. It's been cut in half. All right, so this is actually a really good area to expect support to come in, but it's not in a position to be a leader, and we want to be focused in on leaders right now. So look at something like Hood. I mentioned this earlier. This was one of the requests that came in, and I want to go into a little bit more detail because of the momentum. The momentum is really, really strong on a monthly basis. We had a pretty big drop here, a decent pullback here, and the ADX just keeps making higher highs and higher lows. And then if we go and look at the weekly chart, we are what I call a power trend here. We broke above the ADX, broke above the 25 level, stayed above it here on this correction, right? We had a correction phase, and then we just had a massive drop in this stock. Again, more than a 50% decline, but the ADX is still holding above 25. So this is still in pure power mode. Lots of strength in this trend. We need a pullback because it's up so much in a short period of time, but I would be looking at this as a stock on my watch list because of how powerful it has been. Thanks for watching today. If you have any stock requests you'd like me to analyze on next week's show, send it to stocktalk@stockcharts.com or just put it in the comment area below. Also, if you want to learn some more about some of these techniques, you can go to my YouTube channel. It's called Invest Like a Pro. Have a great week, and we'll see you next time.